Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Okay, so let's jump right in. We're looking at Apple's latest numbers today, their Q2 for fiscal 2025.
Right. The results just dropped,
And they look pretty solid on the surface. Revenue hit $95.4 billion.
which is up 5% year over year. Nice beat there, right at the top end of their guidance.
Exactly. And the earnings per share, $1.65. That's up 8% from last year. And actually a March quarter record for them.
On a record EPS, yeah.
Yeah.
But the really big story, I think, is services.
Oh, absolutely. Up 12%. That's huge. An all-time record.
Mm-hmm. It really changes the narrative, doesn't it? Less reliance just on selling the next iPhone.
So let's unpack this a bit. What's really driving these numbers? We know about tariffs, product updates. What's the story behind the headlines?
Well, those headline figures are definitely strong. Landing at the high end of guidance, that signals, good execution. But that 12% in services, that's not just extra cash. It's about stability.
More predictable income, right, compared to hardware cycles.
Exactly. Things like iCloud, the App Store,
Yeah.
Apple Music, that's consistent money coming in. It cushions them against sort of the hardware ups and downs, a much stronger foundation.
Makes sense. And if we drill down into the products, iPhone revenue grew, 2%? Still the giant share, obviously.
Still the core, yeah.
And they brought out that new iPhone 16, more accessible price point, and it's got their own silicon, even their own modem. Battery life looks good, too.
That modem is a big step. More vertical integration.
Then there's the Mac, up 7%. That's a strong quarter.
Yeah, fueled by those new M4 chips, right? The MacBook Air, the Mac Studio.
Which they're really pushing for heavy-duty stuff like AI development.
Definitely positioning it as a powerhouse.
And iPad didn't do badly either, up 15%, likely helped by the M3 iPad Air refresh.
That's a significant jump for iPad, especially in a market people were questioning.
True. But it wasn't all roses. Wearables, home, and accessories dipped by 5%.
Right, but they flagged that, didn't they? Tough comparison to last year.
Yeah, said they had big launches in the same quarter last year, so the comparison was harder.
Which is fair. Sometimes those year-over-year numbers need context. But the Apple Silicon story across the board, iPhone modem, M4, M3, that's key.
How so?
Well, designing their own chips gives them way more control over performance, efficiency, and crucially, enabling specific features, especially for AI.
Ah, okay. So let's talk AI. Apple Intelligence seemed to be everywhere in the call.
It was definitely a theme.
They're rolling out new writing tools, these AI emojis, Genmoji, Image Playground.
And more language support.
Yeah.
They're really leaning on the neural engine in their chips for this on-device stuff.
And the Mac Studio running large language models entirely in memory. That sounds impressive.
It is, and it points to their whole AI strategy, doesn't it? The focus on on-device processing plus this private cloud compute idea.
It screams privacy and security.
Exactly. It's a hybrid approach.
Yeah.
Using their own AI models, but also partnering up, like with ChatGPT, trying to get the best of both worlds, Power, privacy, access.
And they've already got an LLM running on the latest iPhones, so they're moving fast.
They are, though apparently some of the more personalized Siri features are slightly delayed. Suggests they're being careful, prioritizing getting it right.
Which makes sense for something like Siri. Okay, shifting gears a bit. Tariffs. Always a factor for a company like Apple.
Always lurking, yeah.
For this past quarter, they said the impact wasn't too bad. Managed inventory, optimized the supply chain.
It seemed pretty agile there.
But looking ahead to the current quarter, they're bracing for maybe a $900 million hit to cost.
Assuming current rates stick, yeah. That's a significant number.
But they also mentioned some unique factors helping offset that this quarter. Didn't fully detail them, though.
Interesting. Keeps guessing a bit. But the bigger picture is the supply chain shift.
Right. That was fascinating. They expect most iPhones sold in the U.S. this quarter to come from India.
And Vietnam becoming the main source for iPads, Macs, watches, AirPods, sold stateside.
While China remains the hub for sales outside the U.S.
It's a clear diversification play, reducing geopolitical risk exposure. And being transparent about country of origin helps track that tariff impact.
Smart. That $900 million figure gives a sense of the cost, but their ability to adjust is also clear. Though that Section 232 investigation adds some uncertainty.
Definitely one to watch.
Okay, and how about China itself? Performance there.
Revenue was down 2% nominally.
But they pointed out if you strip out currency effects, it was basically flat, and a big improvement from the quarter before.
which is encouraging given the, let's say, complexities in that market and the rise of local competitors.
They mentioned government subsidies helping and strong uptake from new customers for Mac, iPad, Watch.
And iPhone's still selling well in urban China. So the brand still has pull, even with local competition heating up.
Good signs there, relatively speaking. Finally, let's touch on the financials, the cash pile, shareholder returns.
Always impressive numbers there. They ended the quarter with, what, $133 billion in cash and marketable securities?
Yeah, huge. And they returned $29 billion to shareholders just in Q2. Dividends and buybacks.
And they're doubling down, aren't they?
Seems like it. Authorized another $100 billion for share repurchases.
Wow. That's a massive commitment. Shows confidence.
And they bumped the dividend by 4% too.
So strong signal about future cash flow and rewarding investors. That buyback authorization alone could really support the stock price.
They also briefly mentioned the legal stuff, still disagreeing with that recent ruling, planning to appeal, and the DOJ case with Google is ongoing.
Important context for investors, definitely. Those cases could impact parts of the services business down the road, so they're making their stance clear.
Okay, so let's try and wrap this up. Key takeaways. Overall, a pretty strong quarter for Apple, wouldn't you say?
I'd agree. Driven significantly by that services engine firing on all cylinders.
Plus solid results from iPhone, Mac, iPad.
And you see them actively managing those global trade headwinds, shifting the supply chain.
While investing heavily in AI, their own silicon, and even U.S. manufacturing expansion.
Right, so you got the 5% revenue growth, 8% EPS growth, that March quarter record. You've got the services record.
The ongoing tariff navigation in those supply chain moves to India and Vietnam for the U.S. market.
And then that huge capital return, the $100 billion buyback, the dividend hike, it all paints a picture of a company feeling pretty confident.
Absolutely. It really highlights how multifaceted Apple is now. It's not just about the next shiny device anymore.
Not at all. That services ecosystem is just critical for their stability and long-term health. Their supply chain management seems quite proactive, too, given global shifts.
And the R&D push, especially silicon and AI, sets them up for the future.
Exactly. It's a balance, right?
Yeah.
Investing in growth, managing risks, and returning cash to shareholders. Seems like an optimistic outlook for management.
So a final thought for you listening. Think about these global economic and political forces. We talked about tariffs, supply chain, geography.
Yeah, how might these keep shaping not just Apple, but other big tech players? It's this constant interplay between massive global trends and individual company strategy. Definitely something to keep an eye on in the coming quarters and years.
Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.